It's official, we're halfway through the road to 100k Fiverr series. This is a 12-month challenge and I'm now on month 6. So I've got 6 months left to pass this challenge. I thought it would be good to do a little review, as it always is in trading, to see where we're at, what we've achieved so far, and what we have left to achieve. So we've hit the profit target, and the main challenge we've got at the moment is achieving the minimum profitable trading days. We need 3 minimum profitable trading days, which means we need 3 different days where we've made $500. So far, we've had 1, which means we have 2 left to go. In trying to achieve those 2 remaining profitable trading days, we've actually dipped below the profit target. Maybe spoilers for this episode. But yeah, we're still up 6%, so I'm not concerned. My logic is that in getting the minimum profitable trading days, we'll be back above the profit target and we'll have phase 1 passed in no time. Now, this year hasn't had many trades. As you know, this series, I'm sure you've been surprised at how few trades I take, but it's not always been this way. In 21, 22, I would be taking, a trade a week, multiple trades a month. But this year, I've been taking maybe 1-2 trades a month. Sometimes no trades at all. If you zoom out on the DXY, you'll see that 2024, 2025 literally just been moving sideways, whereas 21 and 22, we had big trend up, big trend down, and that's when I was at my most profitable. So I'm really proud to be up so far in these last 6 months, to be profitable when I'm seeing other people trading the same strategy, losing all their funding, fighting to get their funding back, maybe being negative right now. So I think I'm in a really good position, and I'm very glad that I am being so conservative and taking so few trades. But looking at the DXY, I feel like these range-bound market conditions, I'm not making the most of my time in the market right now. So I am going to be exploring, well, I have been exploring a new range-bound entry, and it's not liquidity sweeps. It's mean reversion. I'll tell you guys more about it when I've experimented a little bit more. So far, the results are way better than the trend trading strategy, honestly, and it works in trend trading years and range-bound years. So yeah, I'll keep you guys updated with that. But that's something I'll probably try and introduce in the last 6 months of this challenge. As you know, I'm a big fan of the 5%ers. If you need a prop firm and you don't know who to choose, I've been trading with the 5ers for, I think, nearly 3 years now. I've achieved nearly $10,000 in payouts from them. I can really recommend them as a very reliable prop firm. So if you don't know who to choose and you need a prop firm, I recommend the 5s, and I'll put a link to them down below. So without further ado, let's have a look at the trades I took for month 6 of the Road to 100k Fiverr series, which was August. Come on, let's have a look. So the first trade I took this month was a reversal on EJ, and it's a pretty unorthodox one because the channel ain't that good, I'll be honest. But if you zoom out, there's actually a lot of layers that go into this trade, and I was really pleased I spotted it, because I spotted it right before, right as the candle was hovering around my entry. I quickly looked at the higher time frame, zoomed out a little bit, and immediately I saw all these confluences and I got involved. So normally when you have a reversal, you have a very clean channel, breaking the highs, retracing, breaking the highs, retracing, and then you have a nice clean break of the most recent low. In this case, we didn't really have that. Maybe on the higher time frame, you could say we've got this kind of movement. So I am kind of seeing a larger channel here. And I would also say that we've got a smaller channel here as well, which is a really high probability confluence on EJ when you have a smaller channel within a larger channel. So already I was willing to be a little bit more lenient on this larger channel not being the best, because we have this smaller channel here, which I consider to be very high probability. But alone, this probably isn't enough for me to take the trade. It wasn't until I zoomed out a little bit and I spotted that we'd actually ascended above this previous swing high here, and we got the reversal. The reversal was a rejection from breaking this high over here. So immediately I was getting a lot of confidence from this trade. We've got the smaller channel, we've got the larger channel, and we've got the break into a previous swing high. But there's even more. If I zoom out even further again, we actually have an even larger channel on the higher time frame. This is a channel that's been going all throughout July, and this move here is essentially a larger flag to move lower. So if I were to draw out what I'm seeing, we've got a very large channel, a break, we've got this swing high, we've got a large channel, smaller channel on the top, and then a little reversal. With this being a flag, this being an impulse, this being a larger channel. So I was expecting this larger channel, this move, to continue moving down, with this kind of being like a correction. The market likes to move from corrective price action to impulsive price action, corrective price action to impulsive price action. So yeah, there's all of the reasons why I like this trade. There's a few things stacked on top of each other, which justify the maybe subpar channel just here. But the most important thing is always prior price action, particularly higher time frame prior price action. So it's always important to look left, zoom out, see what the bigger picture is doing. The break here, it was good enough for me considering all of that. I'll invert it here so you can see what that looked like. I was very, very confident that this was going to continue moving down. I think, what size stop loss did I have? I just deleted it from my chart, so I don't know anymore. Let me just check that real quick. Okay, so apparently I used a 15 pip stop loss, which would have looked like this. As I said, I got involved right as this candle was hovering around my entry, so it was actually a market execution because I was there at the time the candle was at my entry, and unfortunately I got tagged out within an hour. It happens. My stop loss is often quite small because of the nature of the strategy. I'm going for big trades, infrequent large trades. In this case, I just got tagged out, but I was so confident we were going to move down. I'm not sure if we actually did in the end. I think we got a little move down, but I feel like we continued trickling up on the larger time frame. Yeah, there's a little move down. I just got in a little bit early. Obviously, having a larger stop loss here wouldn't have really made a lot of sense. But yeah, that was the first trade I took this month, and it was a reversal on EJ, and I'm just in love with it. I think I gave it a 9 out of 10 or a 10 out of 10. I think it's a great trade. The next trade I took, we'll go straight into it, was a continuation on AU. And I really like this trade as well. Now, unfortunately, after this trade played out, this candle here, there was a data change so that this trade is no longer valid. These highs are now equal, whereas at the time of this trade, this little pullback candle here was an inside bar. So it was counter trend to the previous candle. So I took my pending order off of this inside bar. It was 11 a.m. So it was an unusual time to get a continuation set up on this pair. Let's take a look at prior price action though, because that's what's most important. So we've got this uptrend, just a little uptrend, nothing major. And then we've got this another break into a liquidity area, an immediate reaction, quite a strong reaction, getting this V, and then we had this range, and we got a continuation of the second leg. So we've got liquidity sweep, we've got a V, we've got the range, we've got a continuation of the second leg. We're now in an established trend, 2 candles to break the high, single candle pullback candle, which was an inside bar at the time, and then we got this really, really nice confirmation candle, which is a very, very strong candle for AU. We don't often get continuation candles that are that good with that small of a that tight of a close as well. Not much wick on there at all. So yeah, this was a no-brainer, to be honest. I mean, if I zoom out, I'm pretty sure we're even coming from like a very, very large channel. Kind of, not really. I wouldn't really put a lot of weight on that. But I would say that we're in this large smaller uptrend, you know, on the weekly, higher highs, higher lows, liquidity sweep, V range, established trend, small pullback candles, basically a solid close. So yeah, another trade that I really liked. And unfortunately, I think it was just a 1% loss again. So that's 2 losses now. So I'm down 2% for the month of August, which is a real shame, which puts us below the profit target on the 5s account. And just to top it all off, there was actually a trade which I missed, which I was really annoyed about. It was in the middle of the night, so I can't beat myself up too much, but we'll take a look at that next. Here's the trade that I missed this month, and it was a flag which formed on AJ. We had this not huge downtrend. I think this was like the top of it. So we were just starting on this kind of corrective move down. We had a really great impulse though. This impulse was perfect. It was fantastic. Not a huge amount of support from prior price action, if I'm being honest, but I really liked the impulse, and the flag formation was fine as well. One downside I would say for this flag is that the entry candle is so huge. The reason that this is a downside is because if we break the low, we don't get to reduce our risk. I'll just draw that out here. If we break this low here, normally we would get the opportunity to reduce our risk above this high. In this case, our stop loss is so small that we don't have the opportunity to reduce our risk. We'd actually need another pullback and another break of the low to be able to reduce our risk. But as you guys may have seen, I've been testing a 15-minute flag refinement. And in this case, the 15-minute entry was basically perfect. Take a look at this flag formation here and imagine where is like the best possible place where you would get involved. Well, that is exactly where you think it's going to be. The 15-minute entry was here. So if I go on the 1 hour, you can see that it actually improves your entry by 14 pips, which is nearly a whole additional 1%. And it actually means that when we do break the low, you also get to reduce our risk above the high. So while you're running full 1% risk on the other trade, on this one with a 15-minute entry, you're up an additional 1% and you've reduced your risk to half when we break the low. So this refinement is huge, and if you're not looking at it already as a trend trader trading these flags, I highly recommend that you test them out. Just to quickly go over what the 15-minute flag refinement is, if you haven't seen the backtesting video I did recently, it's basically just taking the flag retracement off of the 15-minute time frame instead of the 1 hour. So if I mark off the flag high here and I drop down to the 15-minute, we're taking the first retracement candle after we break this flag high, which is the candle I marked off there. And yeah, we just get a way better entry. So if you wanted to see how this trade ended up doing, I'll mark off both. I'll do it with a 10 pips because that's what I normally use on AJ. So there's the 15-minute flag. Here is the 1 hour flag. Let's make that green. And let's see how this trade performed. So we actually ran down to 7% on the 1 hour entry and 9% on the 15-minute entry. But unfortunately, we did retrace and we didn't get an opportunity to lock in all that profit. So in the end, it was around 3% on the 15-minute flag and 1.5% on the 1 hour flag. So I did miss out on basically coverage for those two losses that I took earlier in the month. It seems that all of my trades come in pairs at the beginning of the month, and then the rest of the month is just quiet. So yeah, I thought I'd share that with you guys just because I want to cover everything. We'll take a look at the Fivers dashboard now and see how we're getting along. Okay, I've just taken a look at the Fivers dashboard here, and I had a little bit of a mini heart attack because I saw that the AU trade from August 13th was still running. So I just quickly checked my MetaTrader, and no, it was definitely closed. The dashboard is just a little bit delayed. Because if you know, Traders Connect recently had to remove the MT platform. So I set up a new trade copier, and I was thinking, oh no, my trade copier didn't close the trade from like 2 weeks ago. But no, it looks like just the Fivers dashboard delayed, so we're okay. Putting that aside, let's see how we're doing. We've had the one big win in May, or the two big wins, and since then we've just been trickling down. I'm grateful that I reduced the risk to be able to cover the profitable trading days. We literally just need one trade to go over $500. I'll stop being greedy. I know there was a trade, I think it was this EJ trade, where we were actually floating at like 1 or 2%, and I was so confident that it was going to carry on running that I didn't close it for the profitable trading day. I still don't regret that decision because if it would have went as I'd intended, it would have meant that we were deep into the profit target with a big buffer to get the last profitable trading day. So I think it was a risk worth taking, and right now, I mean, we're only down a little bit and we've got 2 profitable trading days to go, so I'm not worried at all. So yeah, we're up 6%. We need to be up 8% to pass the challenge. We need 2 more days where we make 0.5% of the initial balance, which is $500, which is very, very achievable. And yeah, don't have a problem with it. The win rate is 30%, which is about what I expect. Obviously, it looks like the little micro lot trades I've been taking have balanced out. I've got a loss and a win. So yeah, this is probably fairly accurate now, 30%, which is about what I'm expecting for these range band conditions. Because in the trending conditions, my win rate is actually closer to 40-50%. But at the moment, win rate is a lot lower. I actually have 18 out of 30 inactive days left, which means in the next week or two I need to remember to take another trade to reset that, because otherwise I'm going to lose the challenge just based off of not taking a trade. Always important to remember if you're trading this strategy, because there are sometimes 30-day intervals where you're not taking any trades. So as I said, we've got 6 months left to pass this challenge. I'm setting the target of passing a challenge within 12 months. And I am testing a new range bound entry because the market conditions are so range bound right now. I really need some kind of entry for when the markets are moving sideways, because we're just not getting any trends, at least not any that are sustaining. So yeah, I'll keep you guys updated with that. It may replace this strategy in the future. At the moment, it is looking unbelievably promising. I'll keep you guys updated with it. It's a completely unique strategy, like nothing you've seen before. Yeah, I'll keep you guys updated with that. Thank you so much for watching to the end of this video. Comment this emoji to show me that you made it to the end. If you're new to the channel, make sure to subscribe, leave a like, and I will see you guys in 2 weeks when I release a very exciting video. See you all soon.